Time for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thanks for coming on today.
Happy to be here.
Well, stocks in New York were a little higher overnight, bouncing back from the big decline on Monday. Investors watching carefully to see how the Senate race turns out in Georgia. Right now, based on the results, the futures are somewhat mixed. So what's the story in the global markets?
Okay, well, as you mentioned, after ending the year on or near record highs, U.S. markets fell on Monday by 1.3 to 1.5%, depending on the index, and it has been the highest sell-off since October, but on Tuesday, it recovered about half of what it lost on Tuesday. And the fall on Monday is attributed to, as you said, the runoff elections in Georgia, as well as the worsening coronavirus situation. And the rebound today is attributed partially to higher ISM manufacturing purchasing managers index, which came in above market expectations and is at the highest level since August 2018, which hints at a solid future performance for manufacturing. But I cannot help but wonder whether this is just an excuse. My personal opinion is that because the stock market right now is running so much on excess liquidity from a very expansionary monetary policy, people are just nervous about the current height of the market. So after hitting record highs, there seems to be some attempt at profit taking and then carefully rising again and then profit taking. So we're going to see probably these record highs and then falls throughout the year until the expansionary monetary policy moderates. Europe, the European indices seem different country to country. The UK FTSE rose in the new year, completely recovering from the dip at the end of the year. They are attributing this to the last-minute trade deal, which did not end up in no-deal Brexit. German DAX continues to fall from December 28th after hitting a record high, and that's presumably because of the coronavirus situation. And French CAC gained on Monday but lost it all on Tuesday. So European markets seem very nervous as well. The Asian markets, Hang Seng and Shanghai, continued their rise, which started at the end of last year, but Nikkei is falling in the new year after hitting a 30-year high on December 29th. That's, again, attributed to worsening coronavirus situation around Tokyo. But as we can see, the most global markets seem to be nervous about hitting these record highs. So after hitting these record highs, you're having this fall so that the investors can take some profit taking and then rising again after a couple of days of fall.
Well, now here in Korea, the big news, of course, today, the KOSPI breaking through 3,000 for the first time. That was in the morning. Then it came down a bit, traded in a tight range, and in the end was lower. There was high volume today, though. Tell us about the trade in the local market, Professor.
Okay, well, it hit a record high of 3,027.16 early in the morning before 10 o'clock, but it fell for the rest of the day. So if you look at the entire day, it fell 0.75%, ended at 2,968.21. But as you said, it was a very heavy trading day. Individuals bought more than 2 trillion won worth of stock. These individuals seem to think that this falling price for stocks is an opportunity rather than disappointment. And institutions and foreigners, again, they seem to be experiencing some nervousness because those sold their shares, especially in electronics. Now, attention will be on the fourth quarter earning report, which comes out throughout January, because right now the price earning ratio is at 13.47, which is higher than the 10-year average PER for KOSPI, which is 9.8, and 5-year average at 10.1. So we'll have to look at the earnings to see whether the market is in the phase of bubble or not. KOSDAQ, you have basically a similar story. It started very high, fell throughout the day. For the day, it went down by 0.44%. It ended at 981.39. And again, individuals bought, institutions and foreigners sold.
Well, now, switching gears here for a minute, Korea's shipbuilding industry in 2020 is projected to have been #1 in the world for a third year in a row. Some much-needed orders coming in the latter half of the year. Tell us about that performance last year and how you see it going this year.
Okay, well, shipbuilding did incredibly well in December. It rose 105.9% over December of last year. But for the 2020 entire year, it actually fell by 2.0%. Now, one of the reasons why Korea shipbuilding did well this year, at least relative to other countries, was that volume of shipbuilding has been down generally because of the coronavirus, the lack of trade demand, resulting in lack of demand for new ships, and the low volume of trade in oil, which also reduced demand for oil transports. But Korean shipbuilding industry seems to be optimistic about the shipbuilding industry, at least for the next year, because there's a set of stronger environmental regulations coming in next year, so that the industry feels that there will be an increased demand for new ships which are environmentally friendly. Korean Export-Import Bank estimated in November that global shipbuilding orders will rise by 115% by value, and Korean orders will rise by 105% in terms of value. Now, so this may increase the demand for the Korean shipbuilding industry in the next year, but whether it'll continue beyond that is still an open question. The demand next year is estimated to come from the environmentally friendly ships, but once those environmentally friendly ships are initially made, will there be additional demand? That depends on what happened with the coronavirus, what happens with the trade volume, what happens with the oil trade, and all of those are right now unknown.
They sure are, Professor. All right, we'll have to leave it there for today. Thanks so much for sharing your insights with us.
Thank you.